Hello everyone, welcome to IGCSE. In this video, we will talk about bank reconciliation. First of all, what is the definition of bank reconciliation? This is a process of checking why the cash book bank balance and the bank statement balance are different from each other, as they should be the same in theory. If by right, it should be the same. So I repeat one more time. Bank reconciliation is a process for us to check in the cash book. In the cash book, there is a bank column, is a cash column. So we just check based on bank column and then the balance and the bank statements. Bank statements is the documents provided from the bank to the company. And then we check, is this both the same? If not, that is the process that we need to work on. All right. So first of all, let us have a look of bank statement. Let me introduce what is bank statement to you. All right. As you can see, this example is from First Bank of Wiki. This is the bank name, and the company is called John. All right, can see or not in the left. From John. And then in the right, you will see the statement period. It will tell you exactly like this is 2003, October 9 until November 8. Okay, this is the period of time of this particular bank statement. All right, as you can see here in the 8th of October, there is a previous balance carry down, which is 55 cents. In the right, you can see the balance there. And then what happened is in 14th of October, there is a deposit, it's a payroll deposit. That means a hotel pay the company of John, which is 694 and certain cents. So it increased the balance in the most right balance column. And then, for example, John actually pay for some bill of 200 on 14 of it. 16 also, for 16, withdraw cash for 21 and 25 cents. And then with this withdrawal, there is a fee of 16th of October happen, a fee, which is $1.50. This is what we call bank charges, all right? And then there is a purchase of electronics product, maybe, 2.99, all right? And on 20th of October, 21st of October, there is some bill payment of 300. So you can see that so-called withdrawal is in the left, and then there is all the money going out from the company. In the deposit column is when the money coming in. For example, like 24th of October, there is a Interact refund, electronics, there is a refund of 2.99. Okay, anyway, this is their transaction. Let's have a look of the transaction of November. I want you to go skip all the way. After the 6th of November, there is a mortgage payment. Mortgage payment, that means this company pay for some mortgage fee for 700 over. But you can see that 3rd of November, the balance of in the account in the bank is only 640 something, but the mortgage on 6 paying is 700 over, which is what we call overdraft. So you can see here that the bank, this First Bank of Wiki, actually charged 7th of November charging an overdraft fee for $5. And there is another fee for monthly fee, which is $5 charged by the bank, what we call bank charges. All right. So this is just to allow you to have a look how all these bank statements looks like. So as you can see here that there is a negative of 72.47 negative, which is called overdraft. All right. In cash book, by right, in John Company cash book, in this case, by right, you will see there is an amount in the right-hand side, which is credit side of bank. All right, credit side cash book is 72.47. By right, should be in debit side because that is your money. But this is negative, so it's in the credit side. which is in right in the bank column. All right, let's have a look of how the cash book looks like. Okay, this is another company. Don't mix up with the just now John's company. This is a company called Kiran Trader. This is a cash book, debit, credit, left and right. All right, so there is a balance carried out 1st of March. Balance of 7,000 in cash in hand, okay? And then there is a bank balance of 12,750. All right, so this is quite rich. This company, there is some balance. All right, so on 6th of March, you can see that there is a cash debit. There is a bank debit 7,000, and then in the right 6th of March there is a cash credit 7,000. So from here we know that actually what happened is the cash reduced 7,000 and the bank increased 7,000. Okay, what it means? It means I deposit my money into the bank. But this cash belong to Kiran Traders, and then the bank account also, of course, belong to Kiran Trader. All right, so there is a debit credit happened at the same time on 6th of March. All right, and have a look of 12th of March. What happened is this Kiran Trader pay us wages of 2,300, which is reduced of cash. All right, there is a reduced cash. And then what happened is 15th of March. 15th of March, there is a deposit of cash. That means money coming in from OM. Don't know what is that. It should be a customer. Okay, assume that OM is a customer paying 7,000 in cash, 7,500. And then by 17th of March, there is Charu. Charu maybe because it's paying out via check, which is in bank, 2250. Okay, so Chara should be a supplier. I assume there is a supplier. It doesn't sound like expenses, all right? So it's a supplier, which is what we call account payable, right? Account payable 2250. So reduce account payable. And 21st of March, something happened. 21st of March, cash increased 250 and bank decreased 250. So it means that Kiran Trader, this company, decide to withdraw money from the bank as cash. So cash increased at this point of time. And then continue 23 salary, that means pay using cash to pay salary 2004. And then on 31st of March, at the last day of the month, there is a increase of 2,750 in the bank. And then there is a decrease of cash, 2,750 from the cash in hand. It's decreased. All right. So now that is the end, and then you can see that they try to balance it. That means carry down the balance, and they calculate, and then they know that there is a carry down of 2250 and 17,750 in the bank, carry down to the next 1st of April. So this is cash book. So in this case, Kiran Trader on 1st of April, let's say, receive a bank statement. The bank statement should can see that the balance of the bank statement should be 17,750. If not, something is not right. Something happened. Okay. Anyway, so this is another document that I hope to share with you. But this document actually is not from bank. This is from your account. Should be account payable. Yeah, so the account payable. You receive bank statement from account payable, but the words a bit small. So let me maybe zoom in a little bit so that easier for me to do the oops. Sorry, technical error. You should hide this. Not relevant. Okay, let's have a look of this particular statement of account, because I realize that some of you not very sure what is statement of account. Okay, I hope you can see the screen. So in the top right there, ZECO. ZECO is the we call letterhead. So it means that this is company ZECO issue this statement of account to Anson Private Limited. Anson is the customer. So assume that you are Anson. You ourselves is Anson as a company, and then my account payable which is ZECO, which is my supplier, actually issue a SOA, statement of account, to me to tell me that you have to pay me certain amount. But how to read this account statement? Let me have a look. Okay, opening balance is 0. So then previously I never have any transaction with this supplier, which is ZECO. Okay, and then being invoiced this period of time, 1st of April until 31st of May, looks like it's a 2 months transaction. Total invoice amount is 17,000, a little bit. And then Anson also pays certain amount, 7,000 over to ZECO during these two months, and there is a still outstanding that I not yet pay, which is 11,000 something. Okay, so you can see here, in the beginning is 0, and then 17th of May, 20th of May, there is total 3 invoices being issued from ZECO, okay, and to Anson. All right, so this is a, and then there is a last column, it will shows that total. So at this point of time, 20th of May, that time, I actually not yet paid to ZECO is 670. And this Anson Private Limited decide on the same day paying certain amount, which is 179 to ZECO. And there is another payment, 21st of May, also pay 200 something. And there is another amount, 30, 600, etc. And then I pay extra, 300. You can see negative, right? And then you can see here that 23rd of May, Anson actually make another purchase, which is 13,000. All right, and then I make another payment on the same day, which is 1,000. So there is still an outstanding of 11,000. So this is when ZECO try to chase money from Anson, actually not chase, but actually it's just to follow out, let you know that what being paid, what being invoiced, all these things. If there is a credit notes involved, it actually will show here as well. I hope this is really clear to you all. Let's go back to the slide and then we continue with the content. Okay, how to use bank statement? Well, you have to know that we have to obtain, the first thing that we are looking at is obtain the correct balance on the statement of the bank account. We want to know that how much balance we got. I need the official documents from the bank to let me know what is my balance in the bank. Okay, number 2, if let's say the balance is unmatched with my cash flow, I would like to understand, check one by one, maybe it's just a typo error or what in the cash flow. I also want to check that maybe there's some error happen in the bank statement. All right, the number 4, we actually can identify the amount that not yet, okay, not yet credited or debited by the bank. So there are circumstances that the situation is when the customer maybe want to pay you, and then instead of using in here, I give you an example like Do It Now in Malaysia. It actually is called instant transfer. That means once you make the payment, immediately you can see the amount in the bank account. However, in the normal case, like in the past 1 decade, they still using check. Check, it actually take quite a while for the whole thing to happen. So there is some delay. And nowadays, in terms of bank transfer, for example, this normal transfer, what we call IGB, as you can see, I purposely screenshot the definition for you. It takes about 1 to 2 business days, we call working day, in order to see the amount happen to in your account. So in the other word, when your customer make the online normal transfer IGB to you, actually the bank already deduct the money. However, after they deduct your customer bank account money, but the money that will appear in your bank account is not immediately. It's unlike Do It Now, which is instant, but for IGB it's not. Okay, so that is why that sometimes maybe we don't see it and then maybe we forget. So that's why we need the bank statement to confirm I receive it. All right, the next example is why we need to check our bank statement, because maybe there is some fraud. Someone go and in your company go and withdraw the money without your knowledge. Okay, Yeah, so all these things that we can identify through checking the statement. All right. There is another possibility. Nowadays technology is so advanced. There are certain company or maybe HR department or finance department will do some automated transaction to the bank. For example, like salary, which is every month almost the same. So they will set up and configure in the bank in online system to pay the salary in the monthly instructed and scheduled schedule setting. And when the time happen, the date come, the bank system will automatically pay to the intended account. Or even rental is quite fixed. That's why it's actually all instructed. But however, I just let you know that there is some case that when you get the bank to system to pay for you, there are some possibility that it will fail. There is, for example, if let's say you didn't subscribe overdraft service from the bank, that means your account don't have the facility of overdraft, and your balance is so low, and you already automated scheduled the transaction, but you don't have sufficient amount in your bank, it will fail. All right, so it will fail, and then you don't know. So in your cash book, you go and deduct your bank column, but in the bank actually fail to do so. All right, so that is one of the example that it might not match cash book and also bank statement. All right, another case that there is some error. For example, you already make the payment, you try to make a payment to your card supplier, but maybe you key in wrongly the bank account number, or maybe the check you wrote is not right. All right, so there is some example here. I show you that execute with failure. All right, so the bank will tell you that fail. This transaction you asked me to do, I can't transfer at all, so it failed. So all these things is possible to happen. All right, that's all about the bank reconciliation. We will talk about others bank reconciliations details in the next video. Thank you.